how to save money on taxes is probably your biggest question, especially right now since we're in January heading into tax return season. And fortunately, we have a special guest here. It's TJ, the real tax guy, and he's blown up on TikTok and YouTube, answering a lot of the most commonly asked questions related to small business taxes.
Well, first off, if you'd have asked me 20 years ago if I'd be sitting here doing videos for everybody about tax advice, I'd say, I don't think so. But I've been doing this for 30 years. And what I've learned in the last month, because as you said, we have blown up. We've gone from like non-existent to 45,000 followers and 5 million views in like 5 weeks. So there's a humongous need for the information that's going out there. And I started this just because I was getting really irritated with all these videos that start with, here's something the IRS doesn't want you to know about, and here's a loophole, and here's a trick. And it's so specific. It just all depends what kind of business you're in. So we've been developing different ways of answering these questions. But people like to know is that I've been doing this for 30 years. I've got tens of thousands of tax returns under my belt, and I appear to be the only tax guy out there that will actually answer questions from people. I'm not just saying it floors me. I've had 300 appointments in the last 5 weeks trying to meet as many people as I can. And every one of them is telling me that they've asked their tax guy questions and they don't get back to them. So that's why I'm going to help your people out with any questions. And, you're going to shoot at me. And I really hope what we can do today is narrow some people's thoughts on how deductions work and why we deduct, to how it all fits together, and enlighten some people here and make people's day.
Yeah, and there's a reason why I didn't get into accounting myself. I got into entrepreneurialism when I went to college. But I also love saving money and making money. And I know a lot of people who are watching this like to do the same thing. And one of the things I wanted to do personally was, in my business, find the right tax guy or gal and find someone who understood what I'm trying to do, both in my business, but also my personal life. Like I don't like paying Uncle Sam. Nobody does, but we all have to pay taxes here in the United States. But one of the best ways is to use the tax advantages and benefits that the code is written in. If someone can, just like you, articulate that to me and say, well, what's your business type? What are you actually trying to sell? Where do you run it? And what state? And here's all the different things. That's really what we're looking for. And I think a lot of people struggle with that because local tax people don't necessarily maybe want to dive in that deep. They kind of want to just have their state run-of-the-mill tax return.
When you're going to your tax people that are out there now, you got to realize, and I don't want to beat them up. I mean, they're doing the best they can. It's just, here's how training works. I mean, I've got staff here at the office that's on CPA course training. We kind of laugh on the lack of tax knowledge that they're teaching you in college. But you end up going and working at a firm, and you work at a firm that works with these companies up here that make lots of money. And they have their own in-house accountants. They send the information over, and they just learn where to put them on a tax return. And that's why when us in the middle, these middle companies go in to get our taxes done, they say, well, bring your stuff. Well, we're supposed to bring everything. But how are we supposed to know what to bring? And that's why I make the analogy, and people kind of love it. It's like if a surgery ran like a tax office, you'd have to bring all your own instruments for your own surgery.
Yeah.
And that's literally what it is. Because what happens when you're done with your surgery and you got duct tape instead of stitches? You'd go, but my friend got stitches. And they'd go, oh, well, no problem. We'll charge you for another surgery, and we'll put those stitches in that we probably should have told you about in the first place. But your tax people, when you go back and say, how come I'm not getting the 179 deduction on these trucks? Oh, we can do that for you. Well, how come I'm telling you what you need to do with my aren't you supposed to tell me what to do? And so that's what I'm hearing all over the country with these 300 of appointments. But it's the training that they get. They're training from people that are used to getting the data in. And in order to do what I do, you have to have a business background to know what's not in the tax return. I'm one of the only guys I know that'll tell you what's not in your tax return because I've done 30,000 of these bad boys.
Can you help people from all over the U.S. and every state?
I've been doing that for years, especially during COVID and stuff. And now, we picked up another 30 states. I'm pretty much working all over the country. We use video meeting. We have secure things to put together. You get to sign it from home. So it's just like you're here, except you don't have to come up here. But since we're having fun today, if you wanted to come up and come to Minnesota and Duluth, okay, it's about, sometimes 10 or 20 below. You got to experience that once in your life. You could come up here and your airfare, your hotel, and your meals, and the meal that you did to take your favorite tax guy out would be what?
Business expense.
because you have to come up here for business to get your taxes done. But we can do it remotely too. But if you need a vacation, come on up. If people are going, TJ, where would I go to get 20 below? I mean, I don't think that's much of a vacation. But I can come to you if you're in a nice warm place. I got a client that's got to meet with me, believe it or not, in about a week down at the Atlantis Resort in Bahamas. And he said, could you come down and help me out? And you know me, I went, oh man, I'd hate to have to leave this frozen tundra, but I am willing to sacrifice and come down to the Bahamas. So I will be there, for I am the real Phoenix guy.
What's the most common question you get asked from small business owners about taxes?
It's usually something to do with, is this deductible? As if the IRS has a list going, wait, whoa, you're in freeze drying stuff? Well, here's a list of what you can write off, and here's a list. Anything that you need to spend money on that perpetuates your business, helps your business, builds your business, is needed by your business is a deduction. You are only categorizing it so when you run your business, you're running it on your budget. But everybody feels like there's certain things to say, all right, like I'm a tax guy, I'm not allowed to write off such and such. No, don't. It's whatever you need to spend. And that's the biggest question I get is people feel like they're going to put the wrong thing on the tax return, and the next thing you know, the IRS is going to kick in the door and arrest them. One of the things I'm hearing over and over again is I say to people, what are you structured like for your taxes? And people go, oh, I'm an LLC. What kind of LLC? And they're like, no, I'm an LLC. Like, yeah, there's different kinds. You can be an LLC that's a sole proprietor, and that does a Schedule C on your 1040. You can be an LLC that switches over to an S Corp. You can also be an LLC that's a partnership. And see, these are three different tax returns that the deductions are the same, but how you use them and get reimbursed and whatnot for them is different. So the advice is different for each of them. But I've also heard people say you can't be a business unless you're an LLC. Well, wrong. They also say you have to make so much money before you have to file a tax return and you're a business. That's incorrect. Technically, you're a business as soon as you make $1. I mean, the IRS will audit you if they ever get audited randomly. They'll look at your bank statements. And if you've got a $400 deposit that you can't justify, the IRS says, well, that's a business. And, you be saying, no, you have to make $10,000 before you're a business. And that's when you learn. They go, no, as soon as you make $1, that's a business. So there aren't these things. That's why we're doing these videos, because that's kind of information that's out there now that you don't have to do it, whatever. But the corporate structure is where we start, and it's not corporate, but company structure is where we start. Yes.
What are the most common corporate structures for someone who's just starting out and they want to start selling, let's just say, some freeze-dried fruit, and they just are running it out of their home? What type of corporation makes sense for someone who's just starting out, trying to make a little side hustle money?
Okay. Well, this you're going to love, because this is, and remember, these are not my interpretations of the rules. This is not my watching 7,000 TikTok videos and gathering that data. I get my stuff right from the IRS. And you know why I do that, David? Because if I use that rule, I get to sleep at night. If I'm going down the freeway and it says the speed limit is 70 miles an hour, and I'm doing 70 miles an hour, and the sheriff pulls me over and says, do you know why I pulled you over? I get to honestly look at him and go, I had no idea. But if I'm doing 90 and I get pulled over and he says, do you know why I pulled you over? I got to go, yeah, I kind of got an idea. So that's why we teach the rules. So here's one you're going to love. It's actually called a hobby. And the IRS uses this for people that are trying to just lose money in order to save money on their taxes, and they're just having a business to lose money. But in your kind of a thing, people are going to try the freeze-dried thing for a while. They're going to see if it's something they like. They're going to want to get into it, and they shouldn't feel pressured that they have to make all this money and hire a bookkeeper and get a corporate headquarters and incorporate with an LLC and stuff. Let's say you only sold like $10,000 worth of stuff the first year or less. Well, a hobby means that you pretty much spend all your money that you're making. And so you keep track of it, but it doesn't even need to go on a tax return. So if your number came up randomly for an audit and they say, Joe, you put $10,000, and you go, well, we ran it. Here's the records. It's kind of a hobby. We started and found out it really wasn't for us. Okay. And they'll go, oh yeah, so you have a hobby. You just can't lose money in a hobby. So you just get it to zero and it doesn't affect your tax return. You still have that money to come in to replace your costs, kind of a thing. So that's the simplest level of a business. If you do lose money, and companies often lose money the first couple of years, then you're simply on a Schedule C. That's the next level. You just put it on a tax return, Schedule C on your 1040. 90% of the people I review their returns miss tons of deductions. Then, like I said, if you're in food service, you probably want to be incorporated to protect yourself. Then you can become an LLC, single member, okay, which you can do if you're married on the same return. And now you have corporate protection, but you're still doing the simple tax return, okay? Then you can be the S Corp and the other things as it gets bigger and growing, and we'll talk about when you want to make that switch later. But, you can be a hobby for all kinds of years. There's a lot of retired people that make lawn ornaments and bird houses and things like that, and they do keep the records, but they don't have to put it on a tax return because it's a hobby.
When someone has a home-based business or hobby, what are the most common expenses that people miss deducting when they're running a home-based business?
All right. I'm going to add to that some of the mistakes people make because of crazy videos out there too, because it's kind of in the same family of questions. And this is where your structure of your company comes into play. So if you're just on a 1040 Schedule C, like we were just talking about, people often miss the meals that you eat doing it because they don't understand what a business meal is. They get bad advice. Ones they miss is internet at home, because you got to have that. Some people have their factory or their barn, far enough away where they got to have a separate internet out there. Whatever that is, their cell phones, they need that for business. Okay, when you're on a Schedule C, you can use your home office deduction, but you got to be careful. I see people all the time not doing that calculation correctly. You could only take off a percentage of the house that you're using for an office. But you see, if you become an S corporation or a partnership, you don't have a home office expense. And people go, well, yeah, but I had one before. Yeah, on certain tax forms, you have a home office expense because you're at home and it's on your home kind of tax return. But a corporation is a separate tax return. And I love this one, David. I hear it all the time. People go, yeah, but I'm going to just rent from me. So I'll write me a check for $3,000 a month, and then my business gets a deduction. And I say, you're absolutely right. Your company gets a $3,000 deduction. And they go, so how come you're not telling me to do that? I said, because somebody has to claim that $3,000 as income. Who's your landlord? And they go, well, I am. I said, well, now you got the $3,000 back. So I said, it really didn't help you out much. And then they say, yeah, but you can still write things off. I go, well, now your home just became an investment property. So if you sell it, you no longer get the 2-year home exclusion to not have to pay any capital gain. So was it worth it? No. You just play the game right. So people are always missing the mileage is another one because they don't realize what's deductible and not deductible for mileage. And that's just a huge misconception. That's the biggest one is they listen to the internet and what you have to do in order to make something deductible. And it's not as complicated as they make it out to be on other videos. This is the kind of things people don't realize. They think that I have to be doing something or the IRS gets upset. And here's why they don't get upset. All right, David, you say to your IRS guy, I took TG out to lunch the other day and we both got ribeye steaks and that's why the lunch was so expensive. Could you prove to the IRS that we had lunch? Even if you had a picture, doesn't mean it was that meal, right? There's no way for you to prove that you did it. And on the flip side, there's no way for the IRS to prove that you did it. And that's why it's not a criteria, because there's no way to prove it either way. And I'm not condoning cheating. I like to sleep at night. So I'm talking about, you tell the truth. So for me, it's like, I honestly don't want to drive at 9 o'clock, midnight on a motorcycle in the woods. So I'll get a hotel room once in a while. But if I'm out driving around, I will be able to write off a meal just because it's part of the perks that I can do as a corporation owner. I can give you a real-life TikTok example. There's this kid, he's standing in front of a Lamborghini and talking about how he got the Lamborghini as a write-off. And I had to do quite a bit of research to figure this out because it just perplexed me. Turns out that there's a humongous chunk of the younger population, because of their knowledge of what they learned from TikTok, that says a write-off is a reimbursement from the government. So that if, David, you and I decide to put in there that we spent $7,000 on meals, they truly believe that the government writes us a check for $7,000 because we're helping the economy. And this is what people are getting off the internet. And that's when I said, okay, we'll do some TikTok things and we'll see what it does. And the response, as I said when we started this, is so overwhelming that I'm trying everything I can to get the best information out to people. This is another one people always ask me. I see small businesses just as greedy as the big business, because people think it's like between you and the IRS, okay? And they go, okay, so David and I, you and I go to dinner. I take $200 off my income because I have a business meal with David. We went out to eat, right? Okay. So people go, see, you're screwing the government. Well, no, I'm not. Where did that $200 go, David?
It went out of my pocket and into
the
the
restaurant.
business.
And
The
now
restaurant.
the restaurant has it to claim it as what? Income. So the IRS is going, TJ is not going to be paying that tax. The restaurant is now going to pay the tax. But the restaurant is paying for their suppliers and everything. So now they have to claim that as income. So you see, taxes isn't a matter of you just screwing the government, because you don't do that. You buy what you need for your business, but when you pay somebody else, now they have the income. So it's kind of like a game of hot potato. You want to get all the deductions that you can, and then people who don't understand deductions, they can pay extra because they're not taking the time to learn. But if you learn, because we're not saying go out and eat 7 times a day because you can write it all off. No, I'm saying if you are out and you're hungry and you feel the need to eat, then you can write that meal off. There aren't other special criteria on it. None of the advice I ever give is about overcharging or overspending just to stick it to the government. It isn't about sticking it to the government, because you start doing that and then they start getting upset with you. I'm about telling the truth, and using the rules. So these aren't tricks. These are all things that are in the tax code. So that's why I like making sure people understand that we're not about not paying the government. I'll pay the government exactly what I owe them, but I'm one of those people that I'm not paying 1 penny more.
What are things that I need to make sure I'm doing so that when I do choose to use it as a business expense, I make sure I have it at the end of the year?
This is a good time to bring some up. I'm going to specifically answer that in a fun way that's going to be so simple. You're going to be like, are you serious? That's it? Is we have a subscription thing and we can talk about this at the end again. It's at the end, but there's a free section of that subscription thing that covers exactly what you're talking about. When am I in business? What do I have to do? How do I track things? How do I stay out of trouble things? And then the pay level is basically what I've learned in 300 meetings, that you can condense all the things that I've learned for each of the different companies. So that's a free thing. So people can sign up for that and then get all the stuff. So I'm going to cover a little bit about that now, but that whole thing is a good hour and a half's worth of stuff to know. So here's the answer to your question. Yes, you do have to keep receipts, but not like you think. You don't have to keep the paper part. A smart business person, even if you're just doing it as a hobby, just go get a separate bank account. Okay. That's your business account. Don't have to get a separate credit card for it. You can use one of your own credit cards. Just say that one is for the business. Okay. And when you look at it every month, your books are pretty much done. You don't have to get fancy online payroll bookkeeping systems. You have to hire any staff. You just look at it and see if you're having a positive cash flow. So when you go get that coffee, you put it on the debit card or the credit card that's for the business. It's doing the books for you. And if you ever look at those, it'll say, the name of the place that you went to eat or the coffee, and then it'll put the amount. That's your receipt, because it says on there that you spent it at that particular establishment. What you don't want to do is pull cash out of your business and put cash in your business, because the IRS thinks it's income, or you taking money out. Always do like a transfer from your one account to the business account to loan it the money it needs to run. And it'll know that, the IRS will know it came from you, and they won't consider that income. I did have a client once that they were transferring money between companies by ATM machine, and the IRS added an extra $80,000 worth of income because they did this transfer a lot. And it took 2 years to get that one fixed, but we got it fixed. So that's how easy it is. You do a debit card, credit card, and you do it all out of one bank account, and you don't have to have a box full of receipts. You can still have one as a backup if you want, but the IRS can plainly see, where you're at.
What's the best way to not throw red flags to the IRS when you want to take a withdrawal personally for the work that you've done?
They're not going to know that you took money out of your account for you. So it's not a red flag to the IRS when you do that. But depending upon the structure, like we started this conversation, all my tax advice comes to the beginning thing. But the IRS will, if they audit you and they want to look at all your bank statements and they see cash withdrawals, they're going to want to know where it went. So here's the thing. If you're an S Corp, and I'm sorry, if you're doing a Schedule C like we talked before, small business, just doing it on your 1040, you're going to have some income and you're going to have some expenses and you're going to have profit. Okay, let's say. If there's money in the account, that means you have profit because it's a small business. And if you pull money out of that, all you need to do in that particular situation, okay, is to just take the draw out. You don't have to record it or anything, okay? You're taking what's called a draw. You cannot do a draw from an S Corp or a partnership. You can only do that from an LLC, single member, or something on your 1040. Why? Because you're going to pay taxes on all that profit either way. So whether you take it all now or during the year or at the end of the year, you're paying taxes on all of it. So you do want to keep track that it went to you, you know what I mean? So you don't want to just take cash out because they want to know if it went to you or if it went to somebody else. So it's nice to write yourself a check or, again, transfer it from the business account directly into your account that shows where it went.
What's the best way to do this tax friendly for you as a business to pay your friends and family? Do you have any advice on that?
Sure. If they're like kids, there's different rules for paying your kids if they're minors, especially farm type stuff. Okay. You can't. I've got a guy that wanted to pay his 3-year-old $35,000 a year just for the tax deduction, and I said I don't think the IRS would care. First time I was ever asked that before. But I said, your state might be upset because I don't think you can hire anybody under 14 unless it's farm work. So there, you got to follow those rules. And that's not a tax answer. That's more of a state law thing. But I'm just saying I know it's out there. So you'll have to find the answer to that. The IRS would like to see a 1099 for anybody that you are paying as an independent contractor, that makes more than $600 or more dollars a year. Okay. They'd like to see you send them a 1099.
Like, how often does the IRS audit a small business?
We don't get data like that to look at, and I do all the conferences. I do many hours of continuing it every year. The thing about it is, it's not a matter of getting whether you're, how much the IRS audits you. If you're following the rules, it's still, we were just talking before. If you're doing the speed limit, you don't care if they pull you over. If you're following the rules, and you are being able to justify all your expenses that we're now learning about today, then you don't really care if they audit you. You're like, oh, fine. And the odds are, will they find a little difference here and there? Probably. But, if you're trying to put 75,000 miles on, as the YouTube videos say, or you're trying to write off a Lamborghini, those aren't right. Your gut is pretty darn accurate on what you think's deductible or not. You're
Right.
going to be pretty close, so you don't even worry if they audit you. These 87,000 agents that they were going to get, we want those because they're not going to be coming after small business. They're not coming even after big business. They're coming more after people who are cheating on the benefits programs than most anything else because there's hundreds of billions of dollars that are going where they shouldn't be going. So that's where we need to get more care. But if the IRS wanted to audit me, fine, bring them on in. I'll make them coffee. Because I'm not worried about it, and that's what I want to teach people.
How severe are penalties when it comes to a small business doing things incorrectly for, let's just say, travel and like the traveling type of section? I mean, what's the penalty look like that you've seen?
Well, remember we said we'd come to the point where we'd look at these three fingers, okay? This is a good time to talk about that. This is the rule. This one here. So let's talk about your travel rules, okay? And so you decided, well, I had to do that delivery. I was on my motorcycle. It started to rain. I got a hotel room, okay? So you come to me and you say, well, I had to get that 4 times during the year, okay? Well, this is me up here, and my name's on that return. So I'm going to say 4 times a year based on your income is very reasonable. So there's no reason to look at that. The IRS doesn't do like on TV and go through every category and every receipt and make sure everything's right. They're just looking for what they think is an unreasonable number. So if you have a reasonable number, then you're set. One of the YouTube videos we have is about and it's a true story from the IRS, a couple that had a house in Hawaii and they lived in Southern California. You're allowed to deduct the expenses to get to your property. Well, they could have taken a rowboat for free, but they took a private jet. which cost $18,000 to go look at their property, and they only made $24,000 in rent. And yes, that was a big flag. The IRS decided to look at it. They showed them the receipt. The couple showed the receipt to the IRS. They were happy as can be. So we don't want to be concerned when they come into it. But to answer your question specifically, here's why. We just want to tell the truth. But I tell the truth and I get tons of deductions. I don't need to lie to get any more. There's plenty available by telling the truth. So here's what the problem comes in. Let's say 7 years ago, you decide to write off a bunch of unreasonable travel expenses because someone told you could. Okay. And the IRS decides to pick that year and they go, surprise, Dave, we just decided to audit you for 7 years ago. Just a random thing we do. And they start looking at it. They're like, okay, well, now that we're looking at this is kind of a big number for travel for a business that works out of its, garage. So you'd be like, well, I was told you could write off a trip to Jamaica if you, got up in the morning and tipped your head 3 times east and picked up some business cards, because that's what you see on TikTok stuff all over the place. And the IRS goes, we're terribly sorry to tell you that that does not make it a deductible trip. So we're going to take that off your thing. That's why we want to get the good advice out there. So anyway, let's say you end up owing like $4,000 for 7 years ago. Well, that means you didn't pay those taxes on time. So it's a 15% penalty. Then they're going to charge you interest for 7 years on that money. So by the time they catch up with you now, you might owe $7,000 or $8,000 on that. Okay. Now, the good part is if you know a guy like me, then you call him up and say, listen, I want a first time abatement. So they'll take that 15% penalty off and all the interest, but you still have to pay the original fee, the price, and then the interest. But if you screwed it that way 7 years ago, you probably did it 6 years ago and 5 years ago and 4 years ago. Because remember, we now live in this world of, well, I do 90 on that highway all the time. The sheriff never pulls me over, so it must be okay. I've been writing off 50 million miles a year and the IRS never says anything, so it must be okay. Buried dead bodies next door all week. No one said a thing. It must be okay. And so, it adds up like crazy. Because the IRS, when they find an error in a year, they're allowed to go 1 up and 1 back, okay, for a total of 7. And so it's like, they can do that like from 7 to 6, 5, 4, all the way up to last year. And if you've been doing it all those years, you're going to end up owing a lot. But you only have to worry when. It's if you can't explain that they're legitimate expenses for your business. Because let's face it, if I were to say to you, if you saw a video now that said, boy, just pick up business cards, in Jamaica, and you can write that trip off saying you were down there looking at property. Well, your gut tells you that's not right? I mean, you're going, okay, that sounds a little too good to be true. So that's what you got to go by. If your gut says this just really isn't a business expense, don't put it on there. Then you never have to worry.
I think this all brings up a lot of questions for probably a lot of people watching this of, okay, well, I need someone to actually talk to, like you, TJ, who I can say, hey, this is what I do on a daily and a weekly and a monthly basis in my freeze drying business. I need a good roadmap for what I should start moving forward with in 2025 to do better on tracking things and also taking advantage of other tax strategies. So you, TJ, have something that's like this that can help kind of fill in those gaps.
I knew I was doing this. I just didn't realize how nobody else was doing it. So what we have is kind of a twofold thing to help people out. Number one is that subscription thing, which just gives you tons of hours of, that you don't have to pay me for. It's a lot cheaper to understand how you want to set things up right. And then the way we've always done taxes here is that at the end of the process, instead of just giving you your taxes back and saying they're done and give us a check and sign and move along, we actually spend time with you, because wherever you're at on your business, remember, we're in this middle group. Wherever you're at, we want to grow. And as you grow, you need to get off of, that 1040 Schedule C into an S Corp. And if you want to talk about that, I'd be happy to explain that. That's a big one for people. They think there's a limit that you have to make before you can, and that's not true. When we talk with people at the end of the getting their taxes done, we end up saying, look, your business grew a lot more than you thought, and you're really getting kind of screwed on the 1040. Here's what you want to look at to being the next step, which in most cases is the S Corp. And when you want to make that switch, and here's what you do to make it.
And if you're interested in working with TJ or even just talking to him, what we've got right now is he's got a special offer just for the freeze-dried business folks here. And in the video description of this interview on YouTube, you can go below. There's a discount code for his subscription, which includes a lot of different types of topics, resources, and information about how you can go about doing your taxes properly for your business. But also, it's going to get you more in contact with the real tax guy, TJ, and his team to make sure that you're doing things right and you're also doing it more forward for your business. So you can also book a consultation with TJ. We're going to be doing a lot more conversations with him in the future. But for right now, if you need someone to really fill in those gaps, to answer questions and know your business for your tax return, TJ, the real tax guy, is going to be your guy. So check out the video description below. TJ, thank you very much for being on this podcast and this episode and just literally answering a lot of questions that I myself have in other people.
Well, I'll tell you what, if your audience, they bring you a lot of questions and they tell you they want me back, I will come back anytime you want. I mean, my goal for 30 years has been to help the people out that I work with. And this has just been a real hoot for me the last month to have 300 people that I've been able to help out. And that just cheers me up. So I look forward to helping your folks out as well. So thanks for having me on.